Welcome to the Real Estate Syndication Show. Whether you are a seasoned investor or building a new real estate business, this is the show for you. Whitney Sewell talks to top experts in the business. Our goal is to help you master real estate syndication. And now your host, Whitney Sewell.
This is your daily real estate syndication show. I'm your host, Whitney Sewell. Today our guest is MC Laubscher. Thanks for being on the show again, MC.
Hey, appreciate you having me on. Looking forward to syndicating some ideas on the syndication show.
That's awesome. No, I'm looking forward to it as well. It was great to connect at a conference we were both speaking at a while back and see you in person and then have you on the show again. I'm looking forward to gaining from your expertise and knowledge, and I know the listeners are as well. But a little about MC, in case you don't know him, he's a creator and host of the top-rated business and investing podcast called Cash Flow Ninja, and also the president and chief wealth and investment strategist of Producers Wealth. He grew up in Stellenbosch, South Africa, and moved to the United States in 2001. As an entrepreneur and investor, he has experienced firsthand the challenges that producers and creators face globally daily, and it has become his mission and purpose to help producers and creators create, protect, and multiply wealth outside of Wall Street in any economy. MC, thank you again. Give us an update on what's happening with you right now, and let's dive in.
Yeah, just a lot of exciting stuff. Cash Flow Ninja continues to grow, educational platform, and it all started with a podcast, right? So we're an online education media company that's reached folks in over 180 countries. So super excited to create some more content and reach more people and serve more people. And with Producers Wealth too, our company is reaching a lot of folks. We're in all 50 states in the United States, and we've got strategic partners in Canada. So a lot of exciting stuff to start 2020 and, a new decade, a new year. So super excited to kick the year off.
That's awesome. And it is, being a new year or any year, and really, if you're listening to this in July, this still applies to you. But I know MC has, and I are going to discuss some things today that's going to help you to really attack 2020 and think through strategic planning, if I can pronounce it. But anyway, so MC, I know you have some details and some things you've thought through about how to plan and just think through planning for this new year and get us started.
Yeah, absolutely. And what I would say, it's so true what you just said. This is applicable. You can actually review this weekly. You can do 90-day sprints. You could review it monthly. I review mine monthly, and then I break it down into chunks weekly. So I've got a framework, which I'm very excited to share with all of your viewers and your listeners. So this by no means is just a January start, plan, and map out your attack plan for the year. This is something that regardless of where you are, what the time frame is something that you can implement and execute. So what I have, what I've put together after about 2 decades of studying millionaires, multimillionaires, billionaires, successful investors, successful wealth creators, business owners, is a framework. And also interviewing over 550 cash flow ninjas have helped me kind of crystallize this, because I looked at what is there a framework they use? Is there a blueprint that they use? Because Tony Robbins tells me success leaves clues, right? There's a blueprint. And you don't have to recreate the wheel in everything that you're doing, as you know very, very well, and other guests have said on the show. So what do they do? What is a framework that we can use and utilize and build and craft our own overall strategy, right? And I came up with 4 pillars that all of these guests had put together in their strategy, and that I've identified in a lot of other strategies of very, very successful folks. And I call this framework the business of multiplying capital, because in the end, that's essentially what we're doing. Regardless if we're business owners, regardless if we're real estate investors, if we're getting started, you're multiplying capital to get into the real estate game. You're multiplying intellectual and mental capital. You're multiplying relationship capital. You're trying to multiply financial capital so you have money to invest in the deals. So the 4 pillars of the business of multiplying capital, and there's going to be a a lot of CCs, a lot of the letter C's. So C alert to your listeners and your viewers. But the first one is cash creation. So cash creation is the first pillar. And under cash creation is, well, basically falls us making money, right? And how do we make money? Well, money is a medium of exchange and a representation of value. So we have to deliver value, and that's how we're going to generate cash. So it's either through our products or our services, our unique ability. There's so many different capacities and so many deliverable ways in which we deliver value. All of us are unique. All of us are in different paths. All of us enjoy different things, right? Somebody might have a high income skill set like a surgeon or a lawyer, which they do in the capacity of a W-2, and that's how they create cash. And that's what they enjoy doing. That's their sole purpose. That's that's their unique ability. Other folks come up with products and ideas, and they're a little bit more creative. And then there's a lot of business owners. So we have to create cash somehow. That's the first pillar. And every one of these cash flow ninjas, as I call them, creates cash in some way. There's a great quote from Rich Dad advisor Ken McElroy in the real estate game. He talks about business creates the liquidity, real estate creates the wealth. So his businesses, and he has numerous businesses, creates the liquidity that he then uses to invest in real estate to create his wealth. So we've got to generate cash somehow. The next part of it, and this is one that's been overlooked by a lot of folks, is cash capture. And that's where we're, quote unquote, capturing the value that we've generated and positioning it efficiently. So what do I mean by that? How do you position capital efficiently in vehicles that allows you to leverage it to invest in real estate, and also at the same time allows you to, or the money to do many different functions simultaneously. You know, we've talked on the show before, and we use this in our strategy about the infinite banking concept, right? We utilize overfunded whole life insurance contracts with a dividend paying mutual and dividend-paying whole life insurance contracts with the mutual insurance carriers, right? So that's what we use. That's where we put the money because of the guarantees, the tax-free growth, the dividends that's paid on it, the death benefit, the disability riders that's on there to protect yourself, right? And then also it serves some asset protection in most of the states. So that's why we utilize that. I would put self-directed IRAs underneath that as well, under cash capture, to position capital effectively and efficiently. But those are just two examples of cash capture. And structuring it efficiently, because a lot of folks would say, well, MC, well, what do you mean about positioning capital efficiently? Well, number one, it's protecting it, right, from all of the wealth destroyers that's out there. You know, we could name taxes, we could name inflation, we could name fees, and so forth. So protecting it, number one, and then also helping it, how can I say, escape, the big cost, which is opportunity cost. And opportunity cost is just when your money's doing one thing, you're losing out the opportunity for it to do something else, right? Collateralization, the strategy of collateralizing something plays into that in combating opportunity costs. Well, what do I mean by that? Collateralization is when you use one asset to purchase another asset. So we park money in insurance contracts, then collateralize the cash value in the insurance contracts to then invest in real estate. We still have the life insurance, right? And now we have the real estate. We used one asset to purchase another one. By the way, you can do this with a lot of different other asset classes. I had a wealth coach in the early 2000s. They used in the 70s CDs because it paid double-digit returns. So they would actually go into a bank and say, Mr. Banker, can I get a CD? Because they would get paid like 10%. They would then go to that same bank and say, Mr. Banker, can I get a loan secured by that CD? And the banker would give them a loan of, let's just say 90% of that CD. They would take the loan, go purchase real estate, take the cash flow from the real estate and pay down the loan, and they still had the CD. That's collateralizing. You could do that with HELOCs. Business owners know this very, very well through credit lines for their business and business loans. There's someone in our network that he has a business. He went into the bank, he collateralized his business, receivables, the assets of the business, and he received a loan from the bank to buy the building from which his business operates. So he used his business to acquire the real estate, one asset purchasing another one. So that's what we mean by efficiency and positioning capital for it to do many different things simultaneously. That's under cash capture. The third pillar is
I want to stop you just a second.
Yeah, sorry, go ahead.
I wanted to go even back just a little bit, even to the cash creation. And you had mentioned too, just about how you referred to even like capital or, as even being increasing your knowledge or your skill set and things like that, and being able to, I don't know, you referred to, I can't even remember exactly, but you referred to it as like increasing your capital by increasing your knowledge and your skill set and things like that. But then when you went into, the positioning it efficiently to invest in real estate. And so it can do many things for you. And it reminded me of this conversation I was just having with somebody last night, and they've never had the money to invest, always a low income earner of a W-2. And however, guess what? They're fixing to inherit some money. Okay. So, and we're talking through this, and I'm not even telling them to invest with me, but I'm just like trying to lay some of this out, let's think about this, And
right.
So, but their thought process, and it's really from a lack of knowledge, they've never thought about what to do with, capital like this and what to do with it efficiently.
Yep.
No, it's like, well, when do I get to enjoy it? And I'm like, no, let's think about this. I know that looks like a lot of money, but if you just invested it like this, like you're just going to get this much money every month. Like you didn't have to do anything,
Right. Right.
Like, let's think about this, like long term, and then, how that money can double and again, triple, and then just keep going, as opposed to if you spend it right now, guess what? It's done. It's gone.
That's right. That's right.
So a lack of knowledge, first that capital, that knowledge of what to do with it, but then, positioning it efficiently. Yeah.
It's the non-sexy stuff that we're going to talk about that you mentioned that makes such a big difference, right? We always talk about there's three ways to purchase things too. You could buy cash for it, right, an asset. Then maybe you have the asset and the cash is gone, or you could leverage it and get debt on it. Now you have the debt, you still have the asset. You didn't have to use the cash, or you could collateralize it, which combines the best of both worlds. If you know what you're doing, again, this requires some strategic thinking. Because there's so many different ways that you can do it. CDs, life insurance, stocks, asset-based lending. There's certain financial institutions that will give you a loan on a stock portfolio. So you can get a loan that you're against your stock portfolio to invest in real estate. Commodity-based financing is another one. Gold, silver, art could be used that way. There's actually a crypto company, and by no means endorsing this, please. I'm just conversational, right? We're just having fun on the podcast. But it's interesting to see that there's actually a company that allows you to collateralize Bitcoins and gives you a loan secured by your Bitcoins. So these are just, I would say, the reason why I'm sharing this too for your listeners too is just to get creative and thinking maybe they have capital already or resources already in their personal or business economy that, if positioned correctly, well, now they do have capital to invest in a cash flowing asset such as real estate. Okay. So, I love that topic, by the way, the collateralization part. But those are the first two pillars: cash creation, cash capture. The third one is cash flow creation. It's investing in cash flow producing assets such as real estate. There's obviously a ton of different niches. Also other asset classes that folks can invest in. And that's where the art comes in, meaning what people are passionate about, what they're interested about, what they know about. Also, that's again where the relationship capital comes in. If you know great operators and folks that have a track record, that know what they're doing within the real estate space. And then the fourth one, and this is by no means the last one, how I usually do is I put the first three on top and the fourth one is at the bottom, basically all throughout the three phases, but it's called cash control. And cash control simply means Now protecting what you produce and you create, protecting where you position the capital under cash capture, and protecting the assets that you've invested in through cash flow creation. And how do you protect it? Well, tax strategy is a very big one. Here's one of the biggest lessons that I've learned. And I wish I learned this sooner, but one of the biggest lessons that I learned was, and saw successful folks do, and especially in family offices, is the amount of time and energy that they spend focusing on taxes. It's quite incredible. They look at the entire big picture, their entire personal and business economy, and they make sure that they have a strategy to combat one of the biggest wealth destroyers.
And they're not figuring it out themselves.
Oh no, no. They have A players that in this one specific family office that I sat in, they had 4 accountants and CPAs and tax folks just working on this one family. And this was just the folks that was in there. I'm sure there's more involved in it, but they were making sure that they could legally and permanently reduce that family's taxes, 10, 15, 20%. Because as the one advisor said to me, he said, MC, just think about it. If we reduce this family's taxes 15 to 20%, there's no return in the marketplace over the course of, 1, 5, 10, 15, 20, 25, 30, and then over the next couple of generations that's going to even get close to that. And think about then the capital that they have to put back into their business, to put back into their investments, right? So it's a crucial part that a lot of folks overlook because, again, it's not sexy, right? It's under the iceberg. We see the tip, but the big part, the scary part of the iceberg, if you're in a boat, is what's underneath the water. And if you look at the stuff when it comes to a solid wealth strategy, it's a lot of stuff that you don't see that makes a massive difference. So tax strategy is one of them. Asset protection is another one of them. Proper estate planning is another one of them. That's all under cash control. It's the things that's not necessarily the greatest conversation pieces at a cocktail party, but it's in the big picture and the big scheme of things. If you look at it holistically, it makes a massive, massive difference. Because think about the ability of taxes to destroy wealth. Think of the ability of lawsuits to destroy wealth. Think of the ability of just not proper planning through estate planning and how much money is lost and destroyed just from transferring money from one generation to another. It's enormous if you look at some of the statistics. So that's the 4 pillars that we look at. We keep it very simple. And so if you're planning 2020, and if you're planning, regardless of where you are in 2020 or even in the next year, if you're listening to this is just a framework that you can use to say to yourself, I'm pretty good under cash creation. My business is doing well. What can you do to get better there? I'm pretty good on cash capture, or I need to improve there. How's my cash flow creation? Am I growing my relationship capital? Am I meeting new operators, folks in that space? And then cash control. Do I have a proper tax strategy? Do I have a proper asset protection strategy? And do I have a proper estate planning one?
I love how you refer to that to relationship capital, or I think that's what I was trying to think of earlier, knowledge capital. I love that.
Yep.
And growing that. And are we thinking about that? Those important types of capital.
Yeah. And think about just from that, on those 2, which I'll put under cash creation, right? What do you have to study? What do you have to read? What podcasts do you have to listen to? What skill sets do you need to develop, right? What courses do you need to take? How can you learn certain things? Maybe you need a mentor or a coach to help you with that. And then under relationships too, it's who are the folks that you need to be around with? Who do you need to meet, right? Could you go and find them and meetup groups? Is there events? There's just so many ways that you can grow it. Because if you grow those 2, the other things are going to start to fall in place. I think it's when we focus just on the amount of toys that we have and the amount of money we have in our bank account. If that's the main focus, it's not necessarily going to move the needle as much as focusing on the knowledge that you're gaining and building up, the intellectual capital, and then the relationships and the people in out there.
And when you are focusing on those things, those material things that you can go get right now, I mean, it's that money's just gone. I mean, that's what's going to happen, instead of focusing on like the cash flow creation, like you're talking about. So when you do finally get some wealth, whether you inherit it or whether you make a big sale, if you're focusing on that new vehicle or whatever it may be, everybody kind of has their thing, right? It's going to be gone. Right. And so if you haven't increased that capital knowledge, like you're talking about ahead of time, then yeah, you can forget it.
Yeah. And the other thing that I also wanted to say is I know I mentioned taxes and elaborated on that a little bit. If you look at the framework that and approach taxes as, the tax code is basically a series of incentives that if you do certain things, you get to pay less taxes. So it's almost like a game, right? I believe it's Tom Wheelwright that wrote the book Tax-Free Wealth that he talks about it too. Like he gets excited about taxes because it's a game that if you figure out the game and the rules of the game, that by doing certain things that the government wants you to do, there's a lot of tax incentives for you, or you could pay legally very little in taxes. So under cash creation, for example, the federal government doesn't want to be in the business of creating products and services. They need to create incentives to drive innovative entrepreneurs towards so that they can come up with products and services that solve problems, right? And it's the same.
I was just reading some tax stuff out of a book today, and one of the quotes in the very beginning I really like that it will fit right here perfectly. It says, "In America, there are two tax systems, one for the informed and one for the uninformed. Both are legal."
That is great. That is who's the person that said that?
That was, and it's in the book on tax strategies for the savvy real estate investor from Bigger Pockets. So,
okay,
that quote was Judge Billings. It says Judge Billings learned hand.
I love it. I love it. I might use that, and I butcher quotes constantly, but that's one that I'll try to get right because that's very powerful. Yeah, and then the other thing is if you then look at cash creation. Right? They incentivize creators and producers to come up with products and services. Cash capture, the life insurance has the tax benefits to it because that's one of the bedrocks of societies, right? We're all pooling resources together that if there's a catastrophic event that hits a family, by pooling resources together, is that family is in a better situation, right? So by positioning capital there, again, utilizing the tax code, we get to benefit from that. And then obviously on the cash flow creation, most of your listeners will know that, the federal government also doesn't want to be landlords. Mm-hmm. So they need real estate entrepreneurs to provide affordable housing. And therefore, as an investor or as an operator, you get to benefit nicely through taxes. So just by using that framework and doing certain things, I mean, there's a lot of opportunity by playing the rules properly, as you just mentioned in that great quote.
Yeah. So MC, just a few minutes before we run out of time and just a few last questions, but, in these pillars here, these 4 pillars, where do you see most people are going to mess it up?
It's a great question. I think that one of the most neglected pieces is cash control, which is tax strategy, asset protection, and estate planning. I'm just shocked sometimes how folks do not plan for certain events and have those things taken care of, because that's sort of like fundamental stuff, right? Is having all of those in place. But I think, that is one of the areas I think for a lot of improvement. Again, a lot of folks will focus on the investments and the cash flow and this and the deals and the flips and the wholesales and the sexy stuff, the great cocktail party conversational stuff, but it's the non-sexy stuff that's actually the foundation for everything that they're looking to accomplish, and will actually help them. Just think about taxes, right? You reduce taxes. Now you have more money to put into your real estate investments, and now you get to snowball that quicker and faster.
Yeah, I was just talking the same individual I was talking about earlier. My immediate advice was like, you need to hire a tax expert, a tax strategist, a well-known CPA, somebody to help you think through this so you know exactly. But their immediate concern is, well, that's going to cost me, a few $100s to do that. I'm like, we're talking hundreds of thousands of dollars here that you're trying to get advice on here. Like, I want you to ask somebody that knows the tax law a lot better than I do, and I got that book out. So I took a picture of part of it and sent it to them. Like, I just want you to read this, said, I can't twist your arm, but, I want you to know these things. But anyway, another question, MC, how are you preparing for this potential downturn that everyone's talking about?
Yeah, I'm focusing on those pillars because I'm going to do the same things now and the same things during the downturn. Yeah, there's certain things that are going to change the economy. I cannot control that. That's uncontrollable variable, right? I cannot control what other people are doing and how they behave, but I can control and focus on the things that I can. And that's my ability to produce and create, my ability to position capital, finding great operators and finding great people on my team, and then also my ability to control my tax liability and protecting my assets, and then proper planning. So I'm just going to focus on that. It's not sexy stuff, as I said before, but I think it's the foundational stuff that you need to do. And if you do those things, markets go up, down, and sideways. If I look at that framework, I feel pretty confident that this is something that'll push us through a downturn. Just one more comment too, that you mentioned, a lot of folks look at, what does a tax guy cost? And by the way, I am not a tax advisor. I don't play one on YouTube. I'm not a CPA. I just know the importance of it and wanted to produce, provide some value for your listeners. I look at it as a return on advisor. For my, there's a rate of return, but there's also a return on advisor. So if you've got a great guy on your team, a tax guy, then there's going to be a return on that, and a multiple, by the way, if you've got a really strong player on your team.
No doubt about it. You got to have somebody that knows what they're talking about. It's money well invested to have an experienced advisor, especially in the tax world.
Yep.
But MC, what's a way that we haven't talked about that you've recently improved your business that we could also apply to ours?
I did, here's something that I did. It's painful, but it has to be done. Is going through and documenting everything, all the systems, all the processes, everything, get it all out on paper. And then once you do that, you're going to see that there's a lot of room for improvement. And I thought that, we had pretty good systems. We've automated a lot. We've brought in folks and team players to help us with a lot of stuff. We use a lot of technology. And even just by going through that exercise, there was still a lot of gaps and a lot of room for improvement. So if you've got a real estate business, if you've got another business that fuels your real estate investments, that's something that, that I would highly recommend, because it helps you to put it down on paper, take a step away from your business, look at it and say, whoa, okay, I can do a couple of things better here. Very painful, but very valuable.
Is there any tech that has helped you to document those processes? I've heard of a couple of things in the past. I know I can't remember the names, but there's like certain websites that even help you to lay some of that out. But I just wondered, as far as, is there any way that's helped you all kind of speed that process up a little bit?
Yeah. So I actually, I just use Google Docs with my assistant. Okay. Yeah. So we just worked it through there. I know we looked at a couple of different softwares that you can do that too, but the process, the Google Doc documentation worked really well for us. Kept it very, very simple. That's, that's one of the things I like to do is keep things simple.
Yes. No, that's good. And so what about, your best advice for caring for an investor so they want to come back to the next deal?
The best sorry, go ahead.
Other than obviously, doubling their money in 12 months or something crazy, how are you caring for an investor so they want to keep coming back, to your opportunities?
Yeah, I think the opportunities that we have too is investments that not only reduce taxes a lot, but also produces cash flow and strong cash flow. And also, I think accountability is very important, and communication. So folks, once you they hold you accountable, but you're taking accountability, and you're keeping them informed of everything that they're doing, and you're producing for them, because in the end, you could be a nice guy, be accountable, and send them all these reports and emails and telling them everything that's going on. But if you're not producing the goods, that's also no good, right? So it's got to be very well balanced in that way. But I think, and relationship too, because we're all in the people's business. Really, that's what it is. It's not necessarily real estate or insurance or it's people. So I think that's the big part of it, is caring about people and caring to help people. And I think once you're authentic and you do that, people see through other people, so, and people see through people. So if you're authentic, you truly care, and you really want to help, and you have a strong mission, people, they relate to that.
And what's the number one thing that's contributed to your success?
I would say consistency. I would say never giving up and consistently going after certain things. I make a lot of mistakes. I continue to make a lot of mistakes. It's not perfect. A lot of things are not perfect by any means, but we try. Our intentions are always good, and we're consistent. We're consistently trying, and we keep plugging along, as I say. We don't give up.
And how do you like to give back?
I think one of the big ways has been time recently too. Can we donate to charities? Yes, but I think when you get to a certain stage, time is that's the resource, right? And giving some time to folks, to mentor, to speak to folks, helping folks on their journey. I think that's a big way that folks can give back, especially if they have had some level of success. Because sometimes, there's some things that are easy. Time, there's only so many hours in a day. So I think if we can allocate some time to give and pay it forward, and give back, I think that's very, very important.
No, I like that. You can really show somebody you care by giving of your time. A lot of times more than giving financially. But MC, I can't thank you enough for your time and sharing your expertise and just walking through the 4 pillars: cash creation, cash capture, cash flow creation, and cash control, and the importance of each of those, and how that can help us, just really pound 2020 and make it the best that we can. And so thank you for walking through that. Tell the listeners how they can get in touch with you.
And thank you so much for having me on. They could go to Cashflow Ninja, and we actually have a video series where we go more into depth about all of those different steps. It's at yourownbankingsystem.com, yourownbankingsystem.com.
Thank you for listening to the Real Estate Syndication Show, brought to you by LifeBridge Capital. LifeBridge Capital works with investors nationwide to invest in real estate, while also donating 50% of its profits to assist parents who are committing to adoption. LifeBridge Capital, making a difference, one investor and one child at a time. Connect online at www.lifebridgecapital.com for free material and videos to further your success.